I'm joined by an amazing panel. I'm going to let you introduce yourself, but I've known James, Jason, and Henrik for a long time. They are some of the people I respect the most in the industry, so I thought it would be a fantastic panel. The only thing they asked me when we were preparing for the panel was, Juan, what do you want me to say? And all I've told them is, I want you to be real, right? So I'm quite fed up with this panel discussions where everything is rosy, everything is perfect. I think let's get real on what's working really well.
In that case,
what's working really well?
Exactly.
And what's not, right? I think that is the only way that through these type of sessions we will make an impact in the industry. So with that, that's a brief introduction. James, do you want to introduce yourself?
Hi everyone, James Wright from Beazley. I look after the digital division. We primarily focus on SME clients.
Hi everyone, Jason Howes, Chief Transformation Officer at Allianz UK, responsible for all transformational change across all of our brands and across all of our locations.
Hi everyone, I'm Henrik Bjørnstad. I am the Managing Director of what we call National Markets at Markel, which is the regional offices across Canada, Europe and the UK. And like James, we predominantly look after SME clients.
Thank you. And we thought this composition of the panel with three global insurers, but it's focusing on different areas of the market, could be a good representation of the different objectives, challenges that different insurers face. The three of you have some sort of transformation programs in your companies. Let's start first at the very high level. When you think about your transformation programs, what are you trying to address and what are the main objectives? Perhaps start with you, James.
Sure. So we created a brand new division about 3 years ago, which is Beaz Digital. What we did was we centralised operations, technology and underwriting into one team to better serve our brokers and clients for the smaller end of the market. For most of us that are in maybe large complex businesses, the irony is we were underwriting large risk or small risk the same as large risk, which didn't make sense for anybody really. Part of that journey meant really two things. One is meeting our brokers where they want to trade. That was really important to us. And email, which we'll touch on obviously, is still a predominant channel in some countries for doing business. So that was point one. Point two was the fact that really to be digital, response times back to the broker, delivering exceptional customer services via those digital channels also needs to be first class. So that was another key objective. Really what we were trying to do is improve access to the large complex products that are traditionally offered to large corporate clients, to the smaller clients that are still specialists, but deserve to have the coverage and service that we give our larger clients. That's what it was all about.
Okay, and perhaps just before we get onto the other two, just to bring a bit more to life what you just said. When you say you were trying to avoid underwriting all types of risks in the same way, so basically different operating models for different types of risks.
Correct.
Can you give us an example? So we started working with you guys, for example, in the SME cyberspace, right, which is very different from your London market, kind of Google type of risk. Can you explain us what are the challenges in underwriting cyber SME?
Sure. So we'll start at what was the objective. Our goal, which we've not yet met, and Juan said to be honest, so we're not there yet, so we're not speaking from a position of done, was to automatically quote an email submission coming in to Beazley using technology, zero touch. And that application form that we receive can be from absolutely any market, Chubb, AIG, Beazley, on anyone's paper, receive that submission, and then obviously automatically quote it. The first part of that is to work out, is this for a complex risk or is it for an SME business? And to your point, Juan, that's where really the operating model starts to separate. The point at which that has to happen is the point at which you receive the application form. But that was all being done by outsourced teams in low-cost locations. And to respond within the SLA we want to respond to, that was not going to work. So that first decision point that we need to use making data is understanding, is this a complex or simple risk? Which isn't just revenue. There's other dimensions to that. It could be to do with the amount of infrastructure that we can see that client has. It could be to do with the location that client's in. It could be to do with the kind of control factors that the client uses to protect their security. All those decisions needed to be made digitally upfront to kind of split the operating model.
So you're trying to do a triage of the risk as almost the first step in the process.
Step one, yeah.
Step one in the process, in an environment where your underwriters don't have capacity to probably go through every single submission. Or for those of people in the audience who are not familiar with cyber, just give us a sense of what does it take to triage a cyber risk?
So point one is obviously understand who the client is, location, rough size of the client, proxy for that's revenue. The second phase is then to understand, okay, what kind of technologies have they got in place? And a big part of it is then understanding what type of data might this client be holding in their infrastructure, which is another big factor. So it requires a degree of investigation, I suppose, to make that decision. Some of that is still human, but we've obviously digitized a large extent of it.
Mm-hmm. Okay, we'll get into the details of that in a few minutes. So, Jason, similar question to you. Like, what were the main pain points on the objectives of the program?
Allianz, and again, public knowledge is trying to transform across the world. Okay, it's been on a journey for a few years. The UK is an absolute crucial part of it, and I mean, it's three main objectives: it's digitalise, modernise, and simplify. Alison, there's quite a lot of what you said resonated with me, because actually I don't think it really matters to us whether it's a really small client, a retail shop, or an individual buying home insurance, right the way through to Google, who we were talking, in here today. Everybody wants similar things, and what I mean by that is they want clear communications, they want ease of use, they want things on their phone, they want things on their iPad, they want the ability to talk to people if they want to talk to people. And what's been really interesting, I think, for Allianz is, and what's driving our transformation now across the UK, is putting the brokers and the customers right at the design thinking of that. Mm-hmm. And that's really different, I think. And a lot of the insurance industry, to be fair, is doing exactly the same thing. And that's not always been the way. And I mean, for those that have worked in insurance for a while would know it's quite a traditional market, particularly like commercial insurance. And I think it's really, and you've seen a massive kickstart in transformation now across the UK and in Europe and the US. And this is really driving this simplicity point more than the other two even. It's just people want to do things quicker and smarter. Unfortunately, Google and Amazon as two major, people want to do what they do on Google and Amazon, right? And it doesn't matter whether they're buying insurance or buying commodities or whatever it might be, this is the driver. So for us, that's what we're trying to, at the highest possible level, design and deliver. And we're doing it across the whole value chain, as we call it. So from underwriting to operations to claims and everything in between. And that's where we got introduced to Cytora, of course, at the start of that journey, where obviously we had lots of pain points where people were sending things to us, and really it was taking us a really long time to actually digest that information, ingest it into data sources that we could then move across different places, bring it back together. Sometimes we were offshoring and using our offshore colleagues as well to input data into other places as well. And then by the time that had done, the feedback from all our brokers and our customers as this was going on is, you've missed the boat. And again, that's just, I think, the pace of the world and people's expectations changing, because that was okay 10 years ago. So this is the reason why Allianz is embarking on the transformation journey it is. And we're doing it on multiple fronts, from personal lines to commercial to pet, for those people who've got their dogs and cats insure with us as well. So lots going on, lots of change. And I think the next sort of 4 to 5 years are going to be huge for us, really.
Yeah. So again, very different companies, but response time, so being responsive to broker requests, being like things like quote turnaround time is something really important for you.
Yeah, and you've gone from a world of days was okay. Like if for those that remember the fax machine again, right? It was okay to leave it on the fax machine for a while, right? Then email came along. It was okay to leave an email unread for a while. Now it's not okay. Now it's people want things within 30 minutes, right? So and the broker market, if you just take commercial insurance, there's thousands of different forms of data coming in different formats, things called different things. And what technology is doing is enabling all of us through some of the smart stuff that we're seeing to actually now take that data, turn it around and do really cool stuff with it. Not just I'm a huge fan of AI, Gen AI and everything, because that's what we're all talking about. But there's some brilliant technologies out there that is coming through from, places like San Francisco and other, in Silicon Valley at the moment. Some of that stuff is just amazing. And this is where I think all of us, big insights into the future. It's like, I think the acceleration we're going to see now over the next 2 to 3 years on transformation will probably far exceed what we've seen in the last 5 years as well.
On the expectations piece, it's gone mad. So on the SME cyber market, I'm talking globally, predominantly US, if a risk of ours refers because it needs to be checked for something, the chances of that binding is next to zero.
Yeah.
Which means that brokers have access to markets which are instantly quoting,
Yep.
and they're taking it somewhere else. So that's in the last couple of years, has shifted quite considerably.
It's gone from like weeks to days,
Yes.
to hours, to almost minutes. And so on that point, Jason, can you share with the audience, so have you made progress in reducing your quote turnaround?
Yeah, so, and you guys have been a great help in that, right? And along with some other parts of our sort of IT ecosystem. But we've moved from sort of 5 days for a commercial quote turnaround, right? Obviously, it's very different on personal lines and other lines of business. But if you take commercial, 5 days was not unusual to sort of turn around, put it in all your internal systems, put a phone call into one of your broker partners, and then just start to have a conversation. And that's now down to 3 hours, depending on the complexity of it. And, it will continue to reduce because that's what, that's not happened overnight. It's a constant reduction. And the other massive thing which we've seen, which is really exciting, is that those 5 days before, you landed with a presentation, which, let's just take the Google example of the building across the road. There's the building, right? There's the presentation, the broker sends it to us, we then start to read it. Now, you enrich the data that comes through on that presentation with potentially hundreds of data points. So actually, by the time it hits an underwriter's desk or, whoever's going to look at it, you're actually in such a much better informed place to actually have that conversation to start with. So again, it speeds everything up. And again, this is publicly available information, but in the past, to actually bring that together to enable your, machine learning to run its eyes over it and then start to give you, some thoughts on it. It's quite amazing, again, as these machines are learning what we're starting to see.
Especially as these are like complex risks, right?
Yeah.
Risks with potentially hundreds or even thousands of properties. And
Yeah. I mean, if you take a large real estate, if somebody owns 50 properties in London, you used to sit and go through every single property and work out against the postcode what the flood risk was, what the fire risk was. That land's done now. So, and that's in the space of 3 to 5 years. And this is what I mean about the acceleration and the excitement that I think is coming to the industry, for all of us. It will really help us to accelerate and give much better service and much better output to clients and brokers.
Makes sense. Henrik.
Yeah, I think just to give you an idea of our operations, we are quite a niche insurer. So, for example, we are one of the leading insurers on care risks. So think about daycare facilities, care homes, nurseries in the UK. So it's quite niche. We don't have huge teams, but we have around 800 people spread around a lot of locations. So that's our model. And I think so. Juan, we have worked with Cytora since before your time. So it's been a bit of a journey for us. But 2 stories I sort of want to tell. So when I go back to 5 years ago about that, maybe a little bit more when we started working with Cytora, it was all about data. And I wanted us to be so good at underwriting that people said, wow. And we got a lot of amazing data on these care homes, what type of customers had they had in the past, what did we know, flood risks, all of that stuff. And what happened was, after that project, the underwriters, what they really wanted was, I liked that extra information, but actually just getting that report in front of me instead of clicking another link. So that it's sort of the benefit from them was more on the workflow side than on the sort of brilliant intelligence on the underwriting. So it kind of shifted the focus away initially from data to workflow. And I think that's really important to what Alison said, because we have since then changed. What we're trying to do is to be easy to trade with, which has a relevance component, it has a service level component. So what we say is that in the niches we play, we have to be leading across those aspects. The other story I wanted to mention is that I came from outside the insurance industry, so I've been in it for about 10 years. And pretty early on, and I didn't see it in my own eyes, but I heard about it. Someone said, you know that underwriter, he just photocopied his iPad to be able to store the information somewhere. And he sort of told me that well, you know, it's not always has to be that fancy to be impactful initially. So where we then took the next phase with Cytora in this case was that we looked at the smaller end of our business that tends to come through some sort of web portal or email, and not necessarily underwritten online, but the workflow aspect of that was quite poor, and Cytora really helped us with that. And not only did that improve how quickly underwriters could get to the risk, but it gave us much better data. So it allowed the management of the team became at a totally different level, which was great. And then the next phase of that was to be able to prioritize the risk better, so that for the underwriters, I mean, productivity went up significantly. It had a whole sort of cultural shift in that team, which was really great to see. And now we're trying to roll that out to other parts of the business.
Well, given that you've mentioned the productivity uplift, by how much did it increase?
Significant.
But in order of magnitude.
Order of magnitude is very, very significant, yes.
So I'm sure everybody like, okay, that this sounds fantastic, but like, how have you achieved that? So perhaps it would be useful to do like a couple of minutes overview of what does the workflow look like. I'm sure Cytora will be, not just Cytora, but like what does the underwriting workflow look like in some of your teams that have enabled you guys to achieve this level of impact? And perhaps we start with you this time, Jason.
Yeah, sure. So I'll choose two risks just to sort of bring it to life. So let's just take a motor fleet case, right? So a client's got 100 vehicles, right? And that motor fleet case comes into us. And like I said, the old world was very much, it would then get logged and data goes everywhere. Now, what we've done at the front end is really streamline that data ingestion, okay? Obviously using technology like OCR as best as we can to actually make sure that we're not touching where we don't need to touch it, right? Because that speeds everything up, pretty simple. So it comes in, it then feeds the systems that we need or reaches out to the systems and starts to swap data. So for example, have we seen the risk before? Have we not seen the risk before? Because again, there's nothing more annoying than, you have a conversation with someone said, I sent you this last year, right? It's like, did you? So it's just basic stuff like that, right? You can start to overlay data points. And I know we're going to hear a lot about data today, but it really does drive then the quality of the conversations that come out of it, right? So in the journey then, our big sort of focus was getting it decision ready. That's what we call it, right? So that's because you want it to land with a human, right? To look at it and to actually then be able to do something with it rather than, and this is an industry-wide problem that's existed, is that there was lots of administration that underwriter or person would do, right? So once it's decision ready, then you're into the realms of trading and you're into proper conversations with brokers, meeting the customers where possible. So it becomes a much richer experience for everyone involved, right? So that's where we are now. And obviously then that flows through to quotations, premiums put forward, letters issued, contract certain letters, of course, as per all the regulatory requirements. And then off the back end of that, we liaise back with our broker and we bind the risk or don't bind the risk. And then we update the various systems after that. That drives lots of MI and lots of data. And obviously everything now that in the past you would have probably thrown that away, it would have just disappeared either into these disparate systems. But that data is then available then to actually make you much more better informed decision as you go forward. So even if you don't win the risk now as a new business case, actually there's a lot of learnings to be taken from that you just wouldn't have had before. So that's the motor side of things. I would say the property and casualty side of things is very similar, but obviously very different as well because you have many more data points on the property and casualty side. Exactly what we're saying, just using the Google building as an example, from fire details through to, how far away is the fire station, through to flood risk, ground flood risk, everything else that you can possibly imagine. And again, all of these data points which weren't available before are now available to be able to pull into, to create that ability to get that as onto an underwriter's desk to then to be able to have a proper conversation. And that's our journey that we're on at the moment. I mean, there's lots of parts to that, and I won't talk about claims unless people have got particular wants and needs to cover that today. But that sort of takes you through 2 commercial journeys, if you like.
And to some extent, that actually links back to what Alison was saying in the opening session, right? Which is, how do you use data to inform a more granular risk selection? But at the end, you talked about the first step is to be able to capture the data from the whole intake,
yes,
and which allows you to be much more granular in your risk selection, right? Which, if I understood correctly, this is what Alison was referring to.
Yeah, no, that's exactly right. I mean, the ability with data cloud now and everything that sits around it, and the vastness of the data at our fingertips. If you get that right, it's really, really powerful. If you get it wrong, also, because you have massive problems, and I think we've seen that in the industry as well. But if you get it right, it's really, really powerful, and that's why I think that probably my colleagues here and most people in the industry would say that the focus on getting data at the heart of what is coming out to create the right conversations with broker and clients now is where everybody's driving their sort of quotations and their renewals.
Perhaps you, Henrik, talk about
just a comment, Jason, on that, allowing the broker conversations, because what we saw in that first phase of trying to get all this risk information is that if you start in that end, it can be quite tricky to communicate to clients and brokers why your underwriting decision ends up in a certain place. So what we see now is, instead, if you start with the workflow, the underwriters understand how that works, and then they ask for more data, which is a much more customer-friendly journey.
Yes.
Yeah. So with us, what we do, we get these submissions in. They appear in the CRM, which is then auto-populated by Cytora. And then we get the risks prioritized based on some external data and some of our internal data. For example, what type of risk are we going to say no to because we don't know much about them? It's much better to let clients and brokers know as soon as possible. Where do we see success in the past, and we prioritize those first. And that's really the reason when you talk about productivity. For me, it's not really the point. We don't do that to save money. It's really to come back to customers faster. So a more relevant measure is to see how the net promoter score goes up from that. And as we measure that, particularly on that responsiveness, that has gone up quite significantly with the type of clients and brokers we see success with. That just has such an impact on the teams, because people want to think about new types of risks they can do. They want to have fulfilled jobs. Yeah. And it doesn't feel very good to come home and sort of have traded that with an admin task. So that's personally, that's the biggest, most fulfilling side of all this.
Yeah. And at the end, it's like, sometimes we think like these need to be like groundbreaking operating models for technology. At the end, your underwriters are looking at the risk in the CRM. I think the difference is they've got the decision ready in the CRM within minutes of having received the submission, so that they can get to the broker much faster.
Yeah.
Right?
Henrik, I was just going to add one point, because you mentioned culture earlier and people as well. I think we should be really clear. This technology does not replace people. What enables you to do is the stuff that you want people to be doing, i.e. going to see Alison. Just to be really clear, because you said earlier, right, it's just one example. The feedback we have from clients, right, of all sizes, right, even if someone's spending £5,000, right, it's a lot of money to somebody. Actually, people want to be seen, they want to be heard, they want interactions. Brokers want more and more interactions. There was no flex in the old model to enable you to do. It was everyone was working at 1,000 miles an hour with legacy systems, mainframe, old technology. And so actually the new technology is really crucial, right, Henrik, to do this point that you're saying. I think the people element, I know we'll perhaps touch on it again later, is really crucial, because that, I don't think people will go anywhere. It's then the quality of the people trading that's going to be the difference.
Yeah. Great point. Let's hear James' point on the workflow, and then we'll get back to culture and people, which I think it's a very important point.
The service piece is real, but if there's anybody in the room that's not close to their customer, the baptism of fire for me was a US roadshow early in the journey, and I thought it was going to be great fun, meeting brokers and having dinner, but I spent the second meeting a whole hour being shouted at for diabolical service from our team. I think that was a real moment of going, okay, this is a real problem, we have to fix it. Anyway, I'm not going to draw the flow diagram, but just to let you know, the way we do it is we have a classification engine at the front of the email ingestion, just in case we don't want to use Cytora anymore. We haven't quite given you the front door. It goes into the classification engine, and if it's a cyber new business submission, it extracts about 8 key fields: business name, URL, address, etc. We extract those bits of data because it kicks off in parallel a vulnerability scan of the client's domain name to give us back more data on assessing the risk. And because we only offer the quote to one broker, first in wins, we then reserve the market for any more submissions that come in. So we take the client name and we automate the clearance check. That's first pass. Second pass then, once those bits are done, and worst case it's 3 minutes for the vulnerability scan, we extract all the other data from that cyber application, and it hits, at the moment, a person in the loop. Boo, very disappointing. The reason we're doing that is what we didn't want to do is put poor quality data in front of our underwriters, only for them to have to go back to the original submission because they don't trust it. That would have been an epic fail, and it would have been a fail for Cytora and for the program. So we have someone quickly cross-check the screen in Cytora, which gives them a confidence score on data. E.g., the business name is Bob's Golf, but the email address is something completely different. It's an obvious fail. That would be flagged as low confidence, and that person would correct it. Once that's done, that then gets pushed into the quoting platform, where the underwriter needs to do absolutely nothing. They can trust the data and either hit quote or decline. We are at a point where we could automate that last step. There's a couple of reasons we can't. Without this process, we'd have no idea what bits in the application forms are missing or always incorrect. 2 major problems. One is identifying the business activity of the client. Brokers may not know, so they often leave it blank, or put in something like technology company. That's not particularly useful if you're writing a risk, because obviously there's lots of variation on that. So we're using some third-party products which are powered by AI to enrich that data. However, for those of us that are in regulated, controlled organizations, using AI-generated data to make an underwriting decision, is there any regulation?
No.
Might not be what your compliance or regulatory team want you to do. So again, that's why someone has to look at that and just press the button. But we are at a point where we've got the auto-decline and quote rules. What we need to do is, which is where you're going in the conversation, I think, is take a few more people on the journey so they can understand what are we doing between receiving this very bad piece of data and of course making it better, such that we can trust it to offer terms to a client.
Let's do a final round on culture and how to get underwriters on board, etc. That's often the kind of one of the biggest hurdles. So perhaps we'll start with you again, James, just because you were mentioning this already. So what are you doing with your underwriters to get them on board through this process?
They are super engaged now in looking at what they receive from the platform, and when it's incorrect, helping us correct that, and that comes back in as learning data. They have had to up their digital acumen quite a lot, because I think the thing we're losing in doing this is underwriters touch risks, and I'm not going to say gut instinct, it's not gut feel, but they are learning machines, right? So they start to know what's risky and what's not, and they know what to look for. And as you remove them from the process, they're really anxious about, well, how do I portfolio manage on that basis? To do that, you've got to up their digital acumen using data, and that is a journey. So we're still in that pivotal point. I think they're trusting the tech. They're now realizing my job's changing.
Yeah, and I think one of the things you did, I thought was very smart, is in the initial stages, you provide the underwriters with the decision-ready data, but also access to where the data came from as an interim stage, right?
Yeah, if they're curious,
they
need to see the data lineage and understand it.
Yeah. Jason, similar question to you.
Yeah, so what we found fascinating is similar in terms of the human side of things, in terms of if we leave them to get on with it, the error rate we think was, 40-ish%. So 60% was about right, between 60 and 70, and then the error rates would come through at that type of level. What we found with Cytora, with structuring the data, and as you'll know, we've moved into 90% plus, right? Pretty much across the board in terms of accuracy of data coming in. But you still get skepticism from underwriters, even though you tell them that the percentages were here and now we're here. So I do find it fascinating that culturally we've still got, I think as an industry, got a long way to go in terms of getting everybody onto the same page that we need to trust the data, we need to go with it. It's okay to not actually have all of the reams of information and the 300-page document that backs up everything that they do. I think we've made a lot of progress, and I think, overall we will get there, but I still think we're a way off. I don't think there is much more as an industry we can do around education. This is about people now embracing the technology. But again, what's fascinating is people trust Google Maps, right? As we all do. Yet they won't trust some of the data that is being fed to them from places like Google. So there's this bizarre industry-wide skepticism on some of this. And I think it's just this shift and the acceleration that I talked about earlier of people really getting their head around where this is going and how fast.
Again, similar, but perhaps the angle that you could take is I always love this story that you tell, Henrik, about the cultural shift in your Leeds office. Perhaps do you want to touch on that?
My favorite is in Birmingham, where I think what surprised me initially when we started working together is how much time you spent with the underwriters, just not talking about technology, just understanding what they're doing. And it was so important. So that, because what happened was you got that feeling from the underwriters that you understood what the pain points were. And that allowed us to get that first win. So they understood what was happening, and they understood that we as a company, by working with Cytora in that case, we could actually make it happen, which has led to several internal cases, where we haven't worked with it, but still made improvements afterwards, which I think was a really great partnership. And frankly, just it's one of the things I'll remember for as long as I live. I think that coming into that office 1 year after we had started and just feeling the buzz and seeing, the head of that office won a global award and had to go to our headquarters in Richmond at the shareholders meeting, sit on the first row in front of 1,000 people. This was a very nice story, and that was the start of a cultural shift, which we have so much further to go on this journey, but that was a good start. So I'd say the one thing is really that in the beginning, just overinvest in the engagement part was my learning.
Thank you. I know we're going to massively overrun, so Matthew, don't kill me for this. But should we take a few questions from the audience?
I'm really interested in what you were saying about the incorrect data that comes in from the brokers and how you correct it so your underwriters get better information. How about feeding that back to the brokers and the client so that we actually have our data enriched? Because we don't see that happening. And sometimes we're not aware that the broker is sending out faulty data either. So where is the role of the insurer in ensuring that the client actually has better data to share in the future?
We're always a bit anxious about data sharing in this industry, as you probably know.
My data.
It's your data. We do send that data back to the broker. So it's not like, it's not hidden. It's a point of commercial friction, right? Because we want them to do business with us, and we believe that's great customer service. So it's very difficult to sometimes have that difficult conversation of saying, you've got to up your game on this. But yeah, we do provide it back to them, and they'll see that adjusted.
It's the broker's fault, basically.
Long term, we need to get, you don't want to hear this, but we don't want email submissions, really.
Nobody wants.
But, that's the world we're in.
Just one thing on that. We talked about technology a lot, right? And there was some fantastic tech. We get a lot of pubs, restaurants, that kind of stuff. It's a great example. And, a lot of times it just says pub. And actually a pub can be very different in the UK. Some of them have got dance floors, some of them do karaoke, some of them do a lot of other stuff as well. And so actually what we found is with some of the technology advancements is that, by putting them through some of the models now, they can scrape the web, and we can actually, through the photos that people just post, we find ourselves going back to brokers and saying, you said it was a pub, it's actually a karaoke late night bar. And, and that's a very different risk, right? That you've got a bunch of people turning up to maybe have a quiz night versus a raucous dance floor with, karaoke belting out on a Saturday. And it is completely different rating factors, different things. So again, it's a positive example of where technology is really helping insurers to sort of exchange data so you can actually have those conversations. And this is all available data, right, on the web.
Thank you.
Any more questions?
Hi, thank you. I'm just interested to understand from the perspective of larger corporations that are going to be very heavily data-led, what lengths you've gone to understand your pain points directly from the underwriters themselves, who are not always the most, it being a more traditional role, naturally they might not be as aware of the new technologies, as you said, that are sprouting up left, right and center to really change their roles, change the efficiency. So just keen to understand how you sort of approach that, how you keep their voices prioritized in your business, especially when you have so many underwriters. Thank you.
So I can start. So I do spend, and my management team, quite considerable time traveling around. And when we do that, we always have at least 1 hour where we just take underwriters in, ask, no agenda, just tell me about your day, basically, and issues. And that is, as fluffy as it sounds, extremely informative. And then where we have call centers, I personally, once a quarter perhaps, listen to calls. A bit to my previous point, it is sometimes tricky because I don't have time, and management often don't have time to really get into the details. And that's where working with a vendor like Cytora was very, very helpful.
My biggest piece of advice on that, well, I know this is not easy. Get the right people in the room and come up with a shared objective that isn't talking about the solution. From an underwriting perspective, it might be a premium target or a quote to bind ratio or a quote ratio to underwriter ratio. Have that as the North Star and then warn them it's going to be hard, but we need to be empowered with experimenting with different technologies, because when we started with you, for example, LLMs were not around. And in that journey, that became a new way to achieving actually the key result we were looking for a specific part. So you got to lift it up a level, get everybody shared. Is it cost saving? Is it speed to client? Is it reducing cost? Everyone might in their head have different ideas about what the thing might do. And that's a very dangerous place to start. So start with that shared goal.
Time for one more question.
On your transformation journey, what sort of attrition rate have you seen of your staff that photocopy their iPads, that sort of thing, sort of partway through your journey? What sort of percentages are you seeing across your businesses?
So much go. So in terms of transformation and the programs itself, we've actually seen a relatively low attrition rate, which has surprised us. And I'll tell you why it surprised us, because we thought that you'd get a lot more fatigue in these really large programs. But what's been fascinating is that the people that tend to really want to be part of these programs, the feedback from them is that they're driving the future, they're driving the change, and therefore they're desperate to get it over the line. So actually, we've been on the journey for sort of 3 years already, and we're at sort of very 2, 3, 4%, touch wood when I say this, that we don't have a mass exodus now. But so we've been really, really pleased with that. I think in the wider business, we have seen spikes at different times, pretty similar to I think what the industry has seen, as some people are thinking that the digitalisation, modernisation that's happening at one insurer might not be happening elsewhere. I think that if you would speak to those people now, and we do, and we check in with what everybody's saying, I think it's pretty happening industry-wide now. So I don't think there's anywhere to hide. Everyone's just in a slightly different place on their transformation journey. And I think people like to be in slightly different places depending where they are in their career. So it's a bit of a mixture between those two scenarios, but we haven't seen masses of change in the sort of rates over the last few years.
Very similar with us.
Yeah.
Maybe, so certainly on the underwriting side, if I go back many years, maybe if you think about the sort of old style IT organization, the way we used to operate that versus how we operate now, working more with partners, was maybe a change in skill set, but not really a sudden attrition, I would say.
We have hundreds of applicants for these roles. I don't know whether you've found this. Like if you advertise transformation roles and these change roles now, we have hundreds of applicants from outside of insurance now as well, which honestly was never heard of. So I think, in a really positive way to sort of end this particular point, there's a lot of excitement, I think, just simply because I think the bar is relatively low in the insurance at the moment. There's so much scope to improve it. And I think there's so many people that want to jump on that exciting journey. So, sorry, James, you were going to say.
No, Europe and UK stable. US SME cyber markets balmy, and we've had a few ups and downs with new insurtech MGAs appearing and disappearing, and various changes in that space. So that's where we've seen some attrition.
Thank you so much, Henrik, Jason, James. Thank you for accepting to join us today. I think it's been a fantastic session. So let's give him a big round of applause.
Thank you.
Making Risk Flow is brought to you by Cytora. If you enjoy this podcast, consider subscribing to Making Risk Flow in Apple Podcasts, Spotify, or wherever you get your podcast so you never miss an episode. To find out more about Cytora, visit cytora.com. Thanks for joining me. See you next time.